Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Thursday, the 8th of November, 2007. The market has closed, and if you ever wondered if this is just a big casino that we play in, I think today answers that question pretty good because it sure felt like one. Great day for volatility and day trades, and I've been stressing that it is a short-term traders market in here, and the S&P almost came back all the way to unchanged here at the end of the day. But it did experience just a little bit of selling. You saw that the level that we've been looking at, 148, has been taken out, and the market remains below that level. So for now, I mean, we still have to look at this market as guilty till proven innocent in here. Actually, more neutral than anything. But I think that we had a big volume flush out today. The market was down significantly intraday and saw a very nice reversal of that. Here's a 2-minute chart. You can see this trend line here that was broken and sloppily drawn, but you get the point. And once it made that higher low right here and then was able to make that higher high, it then did continue to move higher throughout the afternoon and close to into the close. And you can see that it recaptured the daily VWAP after it tested it as resistance right here. Then the market blasted right through it, and we did have a positive close here. So 148, we still have to remain suspicious of this market, and 148 to really 149. That's an area that should act as resistance if this market is going to remain in a downtrend. So we're not out of the woods yet. We had a nice afternoon rally, and it's great for trading. I don't know how investors stay sane in a market like this, but we do still have a declining 5-day moving average. So that means we have to remain on high alert that we probably will see some further selling. Maybe those will just be pullbacks and a further attempt at healing this and building a base to rally from. But the daily chart still gives us a lot of reason for concern, and as does the weekly time frame. When you look at these bigger pictures, you can see that this trend line is tested and has held once again, but there's still a lot of cross currents under the market. I mean, you've got stocks like FSLR up 50 points or something today. You get Google starting to get hit, and this is just a normal pullback for Google as well. When they get way up there in that high and that far extended, you've got to expect pullbacks like this. The uptrend really isn't damaged except for the very short term, but I think it does send an important message that it looks like the easy part of the rally in Google and Apple and maybe Research in Motion and Baidu, that the easy money has been made in here, but there'll still be a lot of volatility, and it'll be excellent for trading. So that's what we'll continue to focus on, is the trading. So for now, today's lows down near 145 will be very important going forward. If they break that level, then I think that we can start to look at this head and shoulders yesterday that I had pointed out yesterday again as a potential scenario for a market to drop down towards 142, 143. And yesterday I mistakenly called this an inverted head and shoulders. That's not inverted. That's just a regular head and shoulder pattern. But anyways, the semiconductors, again, I like to stress that just because a market is at a level where there was prior support doesn't mean that it will hold there. It doesn't mean you want to buy at that level. It's extremely risky when you've got the 10, 20, 50, and 100 and 200-day moving averages all heading lower. It's in a downtrend. It's guilty till proven innocent. The easier trades are on the short side, but I don't think that you want to look at this as short right now. I think you want to look at this and say, will this 448, 450 level now become resistance? Or if the market can clear that level, then maybe it's going to be more neutral, but still a very troublesome look to that chart on the semiconductors. The IWM broke down below that 78.40 level that I thought it was so important yesterday, and this morning I had posted a chart early on showing that support once broken tends to act as resistance, and we had a bounce up to that level early on and then a real nice sell-off, but also a very good rally. So if the market can recapture this level, let's just call it 78.50 to be safe. If it can recapture 78.50, then maybe this market can turn around a little bit and this ends up being a bear trap, and then who knows. But this chart is just a big giant mess. We've still got this real negative look to it, though, with this head and shoulders pattern. We've got a declining 10, 20, and 50-day moving average, so you still have to be on high alert. Just because we had what appears to be a good flush out and recovery today doesn't mean that it's clear to just rush out and buy everything. We've still got that declining 5-day moving average, so we need this market to do some healing. Maybe it's going to build a head and shoulders here. Maybe tomorrow we get that pullback, and then it builds a right shoulder, and then it can break past this resistance level. We'll see. For now, though, again, just continue to be very defensive in your approach to the market, and you've got to take the trades as short-term trades, basically. The 50-day moving average was tested today. I started saying that about 2-3 days ago, 4 days ago maybe, even. I think on Monday I started saying that a test of the 50-day moving average would not come as a surprise. Well, that's exactly what we got today. And you can see that the 50-day moving average, it closed right about that level, but it doesn't mean you want to buy at the 50-day moving average. Buying at this level would have exposed you to a lot of risk today. That's basically, right here is where that is. So you can see that you would have experienced this downdraft too. But then the market did make this higher low, and it blasted past this level of resistance, had a good afternoon trade, and then pulled right back to a level that probably should hold as support. If it fails to hold as support, then I think we're in for a test of 51. And if 51 fails to hold, then who knows? Maybe we go to this high, which is about $50.66, I think it was. But still, the market has gotten pretty oversold here in the short term, and now we have to see the quality of any recovery in here, and I think that it's not likely to run right back up to this level, 53.50, 53.60 or so. Instead, we need to see some backing and filling. We need to see this 5-day moving average flatten out and then begin to turn higher before you can really trust any long side action, except for the very short-term scalp trades, which has been, again, it's been a fantastic environment for that. So it remains a trader's market, and today probably shook a lot of people's nerves. Hopefully you made it through it okay.